Good morning, guys. I'll come on here and give a quick weekly review followed by an outlook for next week. So before this week traded, yesterday's close, the beginning of the week's close, Monday, we have this suspension block here, which is a fair value gap with a volume imbalance on the upper or lower end. That's why we color outside the lines here. And if we draw it to the volume imbalance, drag that over the body's respective midpoint well here. And then looking for internal to external range. So that was the daily chart, and the line in the stand for shorts was how we trade below this low into this internal range, or another example of a suspension block here. So now I'll show you the calendar for the week. We have news on Monday, Tuesday, really eyes on Wednesday, Thursday, Friday, and I'll show you how I captured a piece every single day this week. So starting off on Monday, we took previous day high, and we're working within the previous day's range. So then I'll drop down to a 1 hour. So as you can see, we're trading above. Draw our midnight. So we had 9 a.m. news. Look at this Judas swing, liquidity raid into this internal range, and that is in discount of the range. Why? Because we swept lows here and we swept highs up here. So we came down to an OTE 0.79 of the range, below midnight, 9:30 Judas swing. Took sell stops into this fair value gap. Look at the bodies respecting the midpoint, and then we'd have a market structure shift and a fair value gap below midnight. Enter here, stop at candle 1, go back to the H1, looking for previous week's high. So that was Monday's morning session trade. Whenever I lose in the morning, I look for a setup in the afternoon. So coming into 1:30, we have a market structure shift. We'll look at how this lunch imbalance is being respected. After we fail and invert our longs, we invert it. Notice how we close below, come back up to midpoint, close below, touch back into it. There's another fair value gap rebalance here, and then a 2022 model during the lunch hour, and then continuation in our PM setup. So we have a fair value gap here. We don't have any models in here, but we have this right here, 2022 model, target, lunch low or AM session low for 3R. So that was Monday. Tuesday, we had 6 o'clock news in the morning, 8:15, 10 o'clock, and 4:30. So notice 9:30. Well, first let's go back to our midnight. I'm just showing you how I approach every single day. It's really boring and repetitive, and I'm just showing you how I solve a week through what I've gained in knowledge over the years in price action. So 9:30, we use this fair value gap. At 9:40, we make our first presentation here. First presentation after 9:30. We don't use that, and we trade it right through it. And I was looking at this 2022 model long, looking for this fair value gap, but we didn't get filled inside of our 10 to 11 window. So with all that information, we invert here going into the lunch hour, and that is useful information for our PM session. So we're way below midnight, failed to get any longs. We inverted basically our first presentation. Now there's this little bit of imbalance left here. So this fair value gap has been used except for this gap here in price. We close below that and then trade back up into this range. At 130, we don't have any models or anything. We're just strictly a failure swing to the downside. And then let's see, this week, this is Tuesday. We had 4:30 news, so I was looking for an afternoon trade, and we get this long here, which I shared on my Instagram. Enter there, stop below the low. We could target these low resistance liquidities, and it ended up hitting overnight. So you have to have the margin available to capture this overnight move. But if you are trading prop firms, market closes at 1610. I would have targeted these equal highs here and leave my stop up here for 2R. So that was Tuesday, way below midnight. Tuesday low of the week. That ended up being the bread and butter trade. I mean, that entry took us all the way to those highs. So Wednesday, I was expecting a little bit better price action for a CPI. This was kind of lame. 8:30, we sweep highs way above midnight, and we didn't get 9:30. We use this fair value gap, but I'm not using a fair value gap ahead of 9:30 if it's already balanced. So that's why I'm not entering short here, because it's already been used. And this is not a market structure shift, so no real entries on Wednesday. We just chopped around inside this range, using up this wick here. See how we use this CPI wick, chop around bodies, respecting the upper quadrant, close below upper quadrant, touch midpoint, bounce off midpoint. Then we kind of just chop around in here, respecting this lower wick here, and then eventually we make a model, but it fills outside the window. So we raid lunch stops, market structure shift down to upper quadrant, this sell side, midpoint, sell side. and then eventually the lower quadrant of that wick. So just unfortunate no entries on Wednesday, nothing you can do about that. Thursday, same thing, midnight. So I'm drawing a hourly buy side liquidity pool. Thursday. Over here, we have this buy side here. At 8 o'clock, when it was released, we rated a hourly sell stop, and I was looking for continuation to a buy side liquidity pool. So we have fair value gap here, but I want you to realize why this is not valid, because this high, this is just one big leg from 9:30 to 10:15. So that is one leg. You do not want to long this far above 50%. You want to look for, OTE in this scenario, either the 0.62 or the 0.79. And then we respect that little fair value gap, which was useful information. And then we make our true model along here, targeting that buy side liquidity pool. Ended up getting stopped out. I watched the afternoon, 1:30 to 2, didn't have any displacement legs. And then we made a displacement leg long at 2:30, but didn't fill inside the hour. So then we rated yesterday's high for Friday. Here's our midnight. Was looking for this model short here. Ended up didn't. I think that's the draw on liquidity currently. That's where we're going. Once we open up again on Sunday. But with that information, we sweep a lunch low, and we're respecting a hourly wick down here. And 13:30 to 2, we have a 1350 to 210 macro fair value gap here, and then we come down into that at 2:30, and then we trade back up into a hourly internal range liquidity pool. So that's what Friday looked like, and we were below midnight, so that stemmed well for the lunch trade back up into a premium of the range. So that internal range, we're inside of this yesterday's imbalance. We touched the midpoint during the lunch hour, and then that wick, if you take a measurement here, bodies are respecting the upper quadrant of that wick, and then we get a return back in. So that was Friday. So total for the week we had 2.5 minus 1, no trade, plus 2, or 3 if you can hold overnight. I was definitely looking for these M5 low resistance liquidity, because if we go to Wednesday, that low resistance liquidity was this imbalance here. Again, sweeping sell stops, similar trade to Friday, coming back up into the range. So that imbalance there, can target that. So we'll just go with 2 here, considering you only trading prop firms, looking for that and a modified stop loss. You can even use that stop loss if you trade overnight session, because this wick isn't really that far from that body. So we'll do +2 here, -1, and then +2.5 or 3. If you can hold overnight, we'll just go with the 2.5 holding for prop firms, a 130 model into this sell side. So total we had like a 5% week. The price action in August so far has been really choppy, so I've had to make some changes with how I approach the silver bullet window, finding some gems along the way. If you rewatch this video, you'll see what I mean. My entries are not limited to a model forming inside this 60-minute window. My entry is taken inside the 60-minute window, but it can also rebalance a fair value gap ahead of this 60-minute window. So I'll leave you with that information for what it is. Go back to the Outlook version of this video. So next week we don't really have much volatility. We have a orange folder on Thursday and a red news on Wednesday, so not really expecting too much. Turn on the yellow, we have 8:30 and 10 news on Monday, Tuesday, Wednesday, Thursday, Friday. So I will be active every day. So that being said, where do I predict this next weekly candle to go? Well, ultimately I'm still aiming for these all-time highs. We do have a suspension block here. So really I just want to see us come down into this weekly imbalance here for some shorts into buy side. If this transfers over, turn on our 20-day IPTA. So we'll do 40. So far we're expecting bullish daily PD arrays. We do have another daily suspension block here. So if we respect this, then I want to see higher prices. But if we trade through this, then I'm going to start seeking, weekly imbalance and maybe midpoint of this weekly imbalance to this sell side here. So kind of 50-50 in here. Really favoring a push to all-time highs. Line in the sand is this purple imbalance. If we trade below that midpoint and close, then I would be interested in these sell side pulls here. So good luck and good trading.